Please remember that nothing we say here should be taken as personal advice. The conversation is for entertainment purposes only. If you have questions about your financial situation, please talk to a licensed financial advisor. All right, welcome to another episode of Future Money, where we talk about the investments of the future
that will make us money.
Well, welcome back, everyone. Happy October.
Yeah.
The scary season. We got some scary stuff going on. We got spooky, scary.
Yeah. Is that because of Halloween?
Yeah, I mean, theoretically, but unfortunately, we have some scary things going on currently. In general, but yeah.
I mean, first of all, actually, I think talk a little bit about the hurricane in Tampa. It's really scary what's going on there.
Yeah, I mean, like after Helene and now we have Milton. I mean,
we have a lot of clients in Florida. I talked to someone yesterday who was evacuating their home that they just bought a year ago.
Yeah,
it's like I can't even think of something more scary. Right?
It's horrible. Yeah, I mean, having lived in Florida for 2 years in my life, thankfully, while I lived there, I didn't encounter any hurricanes, which is kind of crazy.
Well, I think Tampa didn't have a hurricane for 100 years.
Yeah, it's getting to because Tampa's on the west coast of Florida, so by the time usually that the hurricane makes landfall, it kind of dissipates by that point. But I mean, this hurricane is really scary.
It's fucking massive
the way it changed from category 1 to category 4 or 5, in hours was kind of crazy, and it just kind of shows the sort of climate crisis that we're facing.
I mean, honestly, you're right. We all kind of. I mean, I know there's a lot of climate change denial going on, and we're
not going to even acknowledge that.
We're not going to acknowledge that for sure, but I think the waters in Florida is almost 90 degrees, right, in October. So I think that's really what's fueling that hurricane
for sure. You have warm waters, warm sky. It's just a disaster overall, and it's gotten these storms have gotten worse over time, and I think they said this was going to be maybe the third worst on record. I think only there was one in 2005 and 2007 that were bigger. So we're definitely we have, like you said, we have clients in Florida. I had clients
a lot of friends
in South Carolina from the last one and things like that. So we're definitely thinking about that, and the sort of challenge with all this stuff is, like you said, there are a lot of deniers of climate change, and this is part of why we try to invest in things that are
100%. It makes me feel good, right? I mean, that's kind of our theme, right? Trying to invest, and I think to be more optimistic, this whole AI kind of wave is also going to be very good for figuring out new ways of dealing with climate change. I think.
Assuming we're not burning fossil fuels to power AI, which is taking an exorbitant amount of power.
That's a problem for sure, right? But nuclear, 3 Mile Island, Microsoft reopening that. There is a lot of ways to start thinking differently about energy. I think. Which can be exciting.
What a way to get people excited about nuclear energy, to pick the island that is seared into people's memory of having nucler explosions and meltdowns.
Well, listen, I think nuclear, I think if you human beings, right? Yeah. We remember big events.
Correct.
You know what I mean? And we give
3 Mile Island.
Correct. 3 Mile. 3 Mile Island. Exactly. No, we give them more credence, right? Because they're just happened. They're big. But if you look at over the 100 years or so that we've had nuclear, or at least 70 years, the accidents per kilowatt generated is much lower than coal even. So I think if you start thinking that way, and obviously there is a lot more safety being built in.
Correct. It's not unlike thinking about plane crashes and how horrible they are, knowing that way more people die in car crashes than do in planes. Nuclear energy actually is the cleanest, most renewable. The problem is nuclear waste disposal, and that's what people are scared of all the time.
Correct.
So, but regardless, again, hopefully we're going to find ways to power this stuff, because the climate issues are not going away.
Well, we're not going to find a solution unless we use these new technologies. I think technology is going to be the only way we get through this.
Yeah.
You know, and you know, like it or not. You
For
know?
sure. So with that said, today we're gonna pivot a little bit and talk a little bit, you know, about some areas that we don't generally talk about as much, which is, you know, international markets. You know, unfortunately, conflicts internationally.
100%.
And just kind of what that means. And so,
I mean, listen, the world is kind of messed up right now.
Yeah.
To say the least, you know.
The sad reality that I you know, tell people all the time, it's, you know, I try to be an optimist. I'm what I like to call a realistic optimist.
I'm just an optimist.
Dude. You're the eternal optimist. You're the other thing. What I always say is, I always acknowledge that there's shitty things happening all the time.
All the time.
And the only thing we can do is try to look for positives, try to look for the good in things, look for positive events, good people, and that's how we survive the shit that happens around us.
Totally.
Right? And there are some negative things happening in the world, but you know, regardless of that, you know, just as sort of a thesis, when we do investing and financial planning, right, we think of investing and we think of Apple and Google and Microsoft, and that's pretty much it. But there's a whole investing world out there. Is there something else? Yeah, there's a whole investing world out there outside, you know, the top 6 tech stocks out there.
Well, let's break it down first. I think the goal of this podcast is to think about how to make money and how to be smart with your money and make good decisions, right? And also, like, kind of talk about some of the conversations that we're having with our clients, right? The biggest one right now is like the conflict that's happened in the Middle East, and how is that going to impact us? Conflicts with China, conflicts with, you know, really all the stuff that's happening in Europe too, and like, you know, people are like, oh, well, should I get out of the market because, you know, it feels like going to have a all-out war in Middle East and Europe, blah blah blah, right? And our first instinct is always, it sucks. It's really, you watch these awful images, and obviously there's a October 7th anniversary this week and all these things, right? And then you're like, well, why the market is going up?
Yeah.
Right?
Yeah. I mean, the reality of it is conflict has riddled society since the beginning of time.
Correct.
Right? And we just hear about it more now.
Yep.
Right? Having had family in the Middle East my whole life and grown up in the Middle East, not grown up, but like having gone there all the time, like there was very few times in history that there was not conflict in the Middle East.
Right.
I think the scale is a little bit bigger now, and it's more in our face.
Yeah, I think that's it. More in our face, right?
Yeah.
Like the TV, social media, all that stuff, right?
Yeah.
Like all, you know, everyone takes videos and pictures, and right away it's across the world, right?
Yeah.
So we see a lot of it, and it's not to diminish it because it's really awful.
No, it's horrible what's happening. You know, to all sides of this conflict.
Right.
But that being said, generally speaking, historically, you know, we look at this as how do markets react when there is conflict?
Yeah.
And there's, like I said, there's always some kind of conflict.
Yeah.
Right. And you can go on the high extreme and talk about things like World War II.
Yeah.
Right. So the attack on Pearl Harbor is probably one of the biggest events that, you know, in history that we can think of in modern history.
Right.
And obviously that event was a major downturn in the market.
Sure.
That you know, U.S. entering World War II, like that was a major negative impact for a year or so.
Right.
Right. All the way to things like little skirmishes, like you know, things that happen in Bosnia in the 90s.
I think the Future Money research team here has some stats to share.
Some stats. If we want to like put this up, you want to give us some of the stats here?
Yeah. Pearl Harbor attack in 12/7/41, 1 day return of the market -4%. Max drawdown was about 20%, and it lasted almost 6 months?
Yeah.
Korea. So we're going back here. 1950, June 1950. Next day, down 5%. Max drawdown was 12%. Last 20 days.
Yep.
And then we have these are the ones that we really lost some money, right? The September 11th.
September 11th was a big one.
Was a big one.
Yeah.
Again, 5-1 downturn the next day, and then 12% max drawdown. But again, a lot of these things kind of had a massive thing,
Correct.
right? With September 11, we had a recession already, and September 11 kind of came in, right?
Yeah.
But ultimately, if you think of, if you look at historically, right, a lot of other conflicts, the Cuban Missile Crisis, the Falkland Island, I don't know when that happened.
The Falkland Islands,
in 1982.
Yeah, I remember.
For all our historians here,
that's the year I was born. Me and the Falkland Islands.
The 1990s, the Iraq, Kuwait, the 91 Persian Gulf War, the U.S.-Iraq War in 2003, and the Israel-Hamas War in 2024. All of those markets were up double digits afterwards.
Yeah, and that's the part that I think is important for everyone to note. So generally, this is what we call headline risk. Right. You hear the stories of tanks rolling in. Right. You hear the stories of missiles in the sky and things like that.
You see it.
You see it. Yeah. It creates fear. There's no question. Yeah. And so there tends to sometimes be a defensive tone to the market during the initial phases. Yeah. But like anything else, again, which we reiterate more and more every time we talk, is the market cares about earnings.
Totally.
If earnings are going up, then markets are going up. Yep. And maybe the people don't feel as good about the world right now, but frankly, like for U.S. investors, like the conflict that's happening in the Middle East, as long as there's not a real huge outbreak of multiple countries. Right. And things like that. The one thing people are worried about is oil, right? The price of oil, and
which has gone up a little, actually gone down,
and now came back down. Right? Yeah. So that's the thing. Is like we always talk about it. Don't make emotional moves in the market. Yeah. Stay invested.
And I think you have to have like intellectual humility here. Yeah. To like know that we don't know what's going to happen. And yes, if I knew exactly what's going to happen with the war and so forth, maybe I can make a better decision. But the reality is we don't know, right?
So. And I do love, I'm glad you mentioned the Cuban Missile Crisis, because I use this as an example all the time with my clients. When they talk about selling during periods of volatility and things like that, like, I don't know if there was ever a more contentious, scary time.
We had nukes in Cuba.
Yeah, in 1963 during the Cuban Missile Crisis, where the world was literally on the brink of nuclear war. Right. So if that didn't cause a major market moving event over a year period,
I don't think we knew how bad it was going to be either.
I mean, they knew. There's a really good movie called 13 Days.
Oh, yes, I watched that. Yeah. Such a great movie.
With Kevin Costner.
Totally, yeah.
Such a good thing about what happened during the Cuban Missile Crisis.
You got to give it to JFK, man.
Dude, for sure. I mean, it's why he's known as one of the better presidents. Yeah. The other reason is he died in office, which is, in my opinion... I have this theory, realistically, that only the people who either die in office or live during a really bad time.
Like Jimi Hendrix, or
it's always right. It's the romanticized idea, right? Like Lincoln. I've talked about this before. Lincoln is thought of as probably the best president of all time. Meanwhile, there was a civil war during his time, right? But he's the best president.
Yeah. I don't know as much about American history, but I think he started the Civil War to help save slavery.
Correct.
Right?
Yeah. Correct. However, there was a civil war. So if you think about the fact that you could say that, like, let's say we had that same issue today, would we consider today's president as one of the best presidents ever if we had a civil war?
I don't know about that.
That's my point, is in retrospect. So with all that being said, like, just we have to focus on the long game here when we invest, and not short-term movements in the market. Yeah. And I want to back up for a second too, because when we invest, we generally tend to buy diversified portfolios, not just tech stocks.
Nice segue, dude. I like it.
Thank you.
I like it.
I'm getting okay at this. And one of the rules that there's something in financial advising called modern portfolio theory. Right. And modern portfolio theory states that a certain amount of your assets have to be in each asset class. Right. It's just what they call just fixed asset allocation. Yeah. And depending on how aggressive or conservative you are, a lot of times we see portfolios that are managed that let's just use 100% stock as an example here, that they're supposed, rather than having 100% stocks like in the S&P or whatever it is, the theory says that you should have, let's say, 70% of your money in U.S. or 60% of your money in U.S. equities and 40% of your money in international equities. To me, that was created at a time that, in my opinion, no longer really exists.
I totally agree with you, man.
And to just say that you need to invest in something because it's supposed to happen.
It's so funny. Every finance book, every finance class, you and I have basically advanced degrees in finance, CMA, CPWA, whatever. And every allocation says you got to have 20, 30%, 40% in different asset classes, different regions, and so forth, right? And you're right, like that world doesn't exist. Like the S&P 500, which by far has outpaced every other market.
Do you remember the number? I told you over the last.
I want you.
Over the last, I believe it was 10 years. Was it 10 or no 15 years? Sorry. Over the last 15 years, the S&P 500 has outperformed the ex-US index, so all the other countries in the world, by over 500%.
Yeah, that's 5x.
500%. And so
that is mind-boggling. Like, if you think about it, right?
It's crazy. And when you see portfolios like with some of those robo-advisors like Wealthfront or Schwab Intelligent Investor, or a lot of our clients have target date funds in their 401ks when they come to us that we reallocate, that they have a large weighting in these international markets. Now, we have some weighting, but it is much, much smaller. And it is a tactical decision.
Right. And actually, I mean, I'm dealing with this right now with a very large portfolio where the other firm has put 40% of the client's money in international markets, and that portfolio has underperformed drastically over the last 5 years.
Correct.
And you're like, why am I making money in my American assets and everything else is not making money? And the
book says you're supposed to. The book says it.
That's exactly it. The book says it, but I think you need to think beyond that, because the S&P 500 is 500 companies are based in the U.S. But actually, most of these companies get their revenues overseas.
Right.
And this is kind of what you're talking about, which is different, is the reality is what America has done over the last 10 years is really insane, right? When you think about us having 7 or 8 companies that actually control all of the tech ecosystem, the companies like Apple, who 20% of their revenue comes from China, 20% comes from Europe. You know what I mean? That is, and we're talking a company that's 400 billion in revenue almost. Right? This is more than the economy of, I think, most Africa. You know what I mean? Like, this is like, we're talking massive numbers, right? So I think that's what's happened is, this home bias, right? This S&P home bias is just that these companies are just global companies who have their revenues coming from all over the world.
There's a few things, and that's how we tend to look at international markets now compared to in the 70s when this theory was postulated, where things were a lot different, that we didn't have a digital economy, we didn't have all this kind of stuff. But like, again, if you think about why has the rest of the world underperformed so much comparatively? Right, there's a bunch of reasons. Well, we talked about one of them. One of them is conflict, and there is constant conflict all across the world. Right, for all its faults, the U.S. tends to be a very stable for the people who live in the country. For example, right? Obviously, you could talk about Afghanistan and Iraq, and those military expeditions, but for the people, it's a stable environment. Okay? So conflict in it. Inflationary pressures in the rest of the world, corruption in the rest of the world. No tech ecosystem, with the exception of China, but because they're a closed society, it's not like they never really had the chance to develop it outside of that.
I'm going to say this too, I'll probably get chewed on this, but also like there is no entrepreneurship.
Correct.
In Europe, like, to be an entrepreneur is you come to America.
That's the tech thing, right? Like why are there no tech companies in Europe? I think there's like 2.
Yeah.
That we could think of. One of them makes the chip machines, ASML, right?
Yeah. Socialistic, policies, right? That just, redistribution of wealth. Listen, capitalism is by no means perfect.
Yes.
But it's definitely the best thing we got.
Yeah.
You know what I mean?
Yeah. There's, it's not better like the socialist systems. And again, right, this is all values-based stuff, right? If your value is that you don't want to work that hard and you want to live a happy life in middle, that's fine. America is not the place for you.
Yeah.
But that is why our markets have dominated the world so much. And, China, which maybe 15 years ago, everyone thought was going to be like
before you moved to China.
I
have some really good stats that I got because they're just like really mind-boggling.
Yeah.
So for the S&P 500 U.S. largest companies, foreign sales accounted for 28% of $6 trillion aggregate sales. This is 2023 numbers. The largest regional non-U.S. exposure was Asia Pacific, about 10%, Europe about 8%, right? And only 2% was in China. Okay. The tech sector, aggregate information technology, 60% overseas sales.
Jeez.
60%.
Yeah, it makes sense. You look at all these companies, that's where their revenue is coming from. The U.S. is one part of the economy, right? Because we are a global economy. Think about Google. Everyone on the planet Googles things.
Totally.
Right? Like they're not,
Everyone has an iPhone. Everyone has or an Android.
Right? There you go. It's the whole mobile ecosystem right there. There's two companies in America.
Yeah.
Right?
That's exactly it.
And those are amazing stats. So that's kind of how we tend to view the international markets, is not where the company is domiciled, but where are we doing business? And the truth is big companies are doing business everywhere.
And this is kind of why we're more tactical in our approach, the way that we manage money. We try not to just, we look at what everyone does, but also we try to apply some kind of real life, real world knowledge to it, because, if everyone else is doing the same thing, it's probably not the right thing to do, So I think that's really the reality, is you have to think a little bit more about what your allocations are and really, and these are small things, but can really determine how successful you are investing long term,
And sometimes, listen, at some point there's a right time to buy these assets that are cheaper. There's a running joke that when we were, I think it was a few years ago now, that was 5 years ago maybe, and then came in and talked about another international fund, one of the fund companies. And I was like, listen, guys, if you tell me one more time that the international market's undervalued, I don't know what I'm going to do.
It's funny too. Like, if you think about Europe, the two largest companies in Europe, which are LVMH, Louis Vuitton, and Novo Nordisk, which is a Danish company, which makes Ozempic. I'm sure you guys heard of that. Both of which generate most of their sales outside of Europe. Yeah. I think Novo Nordisk almost 80% in the US.
Yeah, well, that's, the US is using that for sure.
And LVMH, I think 30% in China and the rest in the US, or mostly. Yeah. So just the reality is the geographically where the company is doesn't matter anymore.
It absolutely doesn't. And again, we thought China was going to be the next.
Oh yeah, let's talk about China now.
We thought it was going to be the next best thing, right? And
Chinese market was up 30% last week.
Last month, 2 weeks ago.
Yeah, 2 weeks ago.
Yeah. 30%. Meanwhile, it's down 15% in 2 days,
and it's still down from 15 years ago.
So I know I saw today that they have not made money in China in 15 years. Zero return basically. Can you imagine putting your money in something, actually for 17 years, since 2007, So putting your money in Chinese index.
So China is really an interesting case, right? Because obviously this stat is really crazy. In 2004, the UK economy was the same size as the Chinese economy. The Chinese economy today is 5 times bigger than the UK economy. Like, think about what kind of growth it is. Hundreds of millions of people taken out of poverty, became the factory of the world, blah, blah, blah. We've seen this amazing story kind of play out, right? But at the end of the day, it's still a communist country.
Correct.
There is no real capital market, right?
No, absolutely. And Xi Jinping, the president of China, who is basically effectively the emperor of China. Since he came to power, everything has gone downhill for Chinese investment. Because all he cares about is consolidating power.
Yeah, and also, it's redistribution of wealth.
Correct.
Right?
Well, that's what he says, but it's really making sure that he.
Well, that's what communism is.
Right. China's communism is not like true communism, but like in reality, they were becoming a pseudo-capitalistic communist country, and now they just become a dictatorial, totalitarian.
Yep.
Pseudo something economy.
Yeah, so I guess invest at your own peril. I think that's the word.
The problem with China is a few things, right? So Xi is one of them, right? Their markets being an ultimately closed system to the world. The companies are a black box. We have no idea what's going within them. We have no idea if we can trust the numbers. You don't even own the company technically.
I mean, that's a really people ask me to buy like Baba, whatever Chinese stock. I'm like, you understand? You actually don't own the stock. You own an interest in a
holding company
in the Bahamas.
In the Bahamas. Like if I told you that without telling you, I'm not gonna tell you what stock we're investing in. But it's a holding company in the Bahamas. You'd be like, yeah, I'm gonna go.
Let's do that.
Yeah.
So it's really important to understand these technical things because and one, no transparency. We don't know how many fraud, how many stories of shell companies, being basically ransacked and all that have we seen. So it's really important to understand.
You don't actually own it,
that kind of risk. And I'm not saying that everything is perfect in America, but at least we don't have that kind of risk inherently within that investment. Right?
Correct. And by the way, that the government could any day of the week come in and say,
pull it up.
You're done here. Like, remember Ant Financial? Ant Financial was Baba's Baba's financial wing.
Fintech,
was going to go public in the biggest IPO in history.
Yeah.
And literally 2 days before, the government's like, nope, you're not doing that.
Yeah.
And you heard of them recently?
No, I mean it's done.
They're over.
Yeah, I mean we'll spend hours talking about all the failed.
So that's that, right? So there's that. There's the fact that it's not transparent. They have the real estate issues, like these ghost towns, basically. They overdeveloped in real estate that basically people can't.
They have basically a slow-moving financial crisis.
Correct.
Like what we had here in 2008.
They do have a lot of cash in the bank. That's their saving grace.
Right. They do, but also.
But that hurts their economy too.
Yeah, that's exactly. Too much savings.
Too much savings. Not enough people spending.
Right.
And their COVID policies really, really hurt them too.
Population issues.
And then their population is declining in general.
Yeah.
I saw this stat, which is kind of crazy. It's like it showed the growth of China's population between, the 1950s and 2010. And it was like, it went from like 500 million to like 1.2 billion.
Right.
And by 2050, it's supposed to be back to 500 million again.
Yep.
Because their one child policy, which they revoked since then. But people are still not having kids in China. And so their demographics are being not great. So it feels like a slightly different version of what happened to Japan in the 80s, like late 80s, early 90s, where it basically kind of became uninvestable.
Yeah, but I think Japan is maybe a little bit better because they have, I think, more innovation. They do have real capital markets.
Sure, but remember that for 37 years, the market didn't go anywhere. But in a sense that their demographics were waning.
Sure.
They were overinflated. Their economies were overbuilt. Japan had some of the similar issues with real estate in the 80s, where they overbuilt real estate. They overbought everything, right? Remember in this is maybe like 10 years ago, like every other week you'd hear like the Chinese company bought this building and they bought that building. And
the Riviera Country Club.
They bought the Riviera Country Club and the Beverly Hills Hotel,
I think it's the most valuable piece of real estate land in LA. It's the Riviera Country Club. There's like 300 members. It's right in basically the Palisades.
Yeah.
It's worth, I think, $3 to $4 billion, right? And it's owned by this Japanese guy.
Right. Yeah. Well, that was the 80s here. Yeah. The 80s, late 80s. All the buildings were bought by Japanese companies, Japanese people. And that faded. And that was what was happening with China, and that's kind of faded. So for nothing else,
I think what you're talking about too, which is really cool, is capital flows.
Yeah.
Whenever people make money in different countries, Guess what they do?
They come here.
They come here and buy assets. The
that
Chinese
should tell you something. That should tell you something about capital markets here, right? Is the stability.
Well, also property laws, right? Like you can actually own. Nobody's going to take your property away here,
right?
Right? If it's not ill gain, like if you didn't steal it, you have some property rights. You have real court system, legal system. They can really protect you. For the most part, we have good, money laundering things,
Money laundering laws is what he means. Not good ways to launder money. Just so
that's
clear.
what I mean. No, that's exactly. No, that is. Although I don't know about real estate. So, but I think that's really kind of we benefited from that. I think in America, for having a lot. I mean, you go to Malibu, right? Like you look at who owns these properties, and it's foreigners from over the world, right?
Half the time they're empty. There's like
exactly.
Like,
so
what the hell's going on?
Yeah, so I think that those, and then I think we talked a lot about behavioral finance and like how your biases and so forth, right? This home country bias is a real thing, right?
Yeah.
Like, but we know the reason why we are so bullish on America is because we really truly have one of the better system for incubating great ideas, putting money and investing in them, and then allowing for those ideas to grow and become these fantastical businesses.
Correct.
Right?
Correct. Yeah. And that's why China is not where we are right now.
100%.
Because of that, right? They could be leading this tech revolution because for argument's sake, if China was more of an open system, not even fully, more of an open system, you could make the argument that we'd be chasing them in the tech run.
Well, I mean,
because they're a newer economy, they're digitally built. They were built in the digital world, right? Where we had to build our digital world on top of the analog world. So if you're starting on the digital world, you should be able to ramp up faster. They have more manpower. They have more all this stuff.
And oftentimes central system is better, right? Like just get it done, right?
Right. Central system, more manpower, cheaper labor.
Right.
So that all bodes well for huge growth. But then you have a country that doesn't. Right. Then they have a country that actually doesn't support growth, that actually hinders it.
Sure.
And so we remain solely on top because of that.
Yeah. So I think the purpose of this episode was really talking through some of these allocation, really discussions that a lot of people are having, and and really being a little bit more thoughtful about like where to put your money, where the growth is, why things are that way, and being critical sometimes of what the book says. Yeah. Right.
And to play devil's advocate here, it's still important to, number one, own different asset classes.
Diversification, obviously.
Because the S&P 500, as we've said numerous times now, is basically 6 tech stocks now. Yeah, right? That's 30% of the money is in 6 companies, and that presents its own risk.
Sure.
Right?
Yeah, I think that's the other thing. I think the whole market cap of the S&P is like 40 trillion, and then half of it basically is 7 or 8 companies.
Yeah, I mean it's a lot in a very distinct, because it's now almost 30% in 6 companies.
Yeah, 6 companies. Yeah,
and it presents its own problem. And actually, what we saw in the third quarter was actually more of a reversion to the mean.
Correct.
So the S&P.
What do you mean by that? Can you explain that?
So the S&P has been handily outperforming all year and last year.
Yeah.
And as rates started to drop, that generally bodes well for other asset classes like small cap companies that are more sensitive to interest rates, to bonds, to international stocks. And all those assets actually did significantly better last quarter than the S&P. But we've seen this in fits and starts for many years, where these asset classes will jump, and then once again, S&P will kind of take over. So there's all this data that keeps showing that we're supposed to have all these diversified assets, and you should have some.
Right.
But our kind of concept has been that the bulk of your assets should be in the larger cap U.S. companies, and then sprinkle some small caps, sprinkle some bonds, sprinkle some international, just to get exposure to the areas for the times that they do well. And the diversification, the asset allocation, helps blunt the volatility, which, as you know, is what clients really care about most of the time.
At the end of the day, that's exactly it, right?
They don't want all the movements up and down as hard.
Yep. And I think, again, it's really about being smart about that diversification, right? Like, where do you go? How much bonds versus stocks versus cash versus private assets do you have?
Yeah.
And like, really allowing for that portfolio to work the way it needs to, but also understanding that, you want to own the kings of the world. And,
for sure.
Frankly, this is the S&P, so go America,
Yeah. And that being said, this will maybe be our last episode before the election. That's the other thing that we keep talking about. Again, don't worry about the election. As far as for your money, don't invest with emotions with this stuff. All history has shown us is that just stay invested. It doesn't matter who's in power over time.
Market have done good under Republicans, have done good under Democrats.
Yeah.
Well, actually, what's the best is having a divided government because you have more checks and balances.
Yeah.
So regardless, again, better in America all day long.
Yeah, I mean, everything shows that if you try to make short-term investment decisions, all it does is hinder your long-term performance.
100%.
Right? So just don't worry about it. Just stay invested. Whatever allocation we've come up with that you're comfortable with, that's where you need to be. And when times get tough, it's fine to be nervous, but remember the premises, remember the tenants, and remember that if markets fall, you shouldn't want to sell. What you should be doing is calling and saying, hey, can we buy?
Totally.
We buy more.
All right. Well, let's shut it down. That was great. Awesome. It was an awesome episode again. And
sounds good. We'll see you guys next week.
All right.
Next month. Sorry, not next week.
Yeah. Go vote.
Bye.